So I'm just making a really quick video because I want to talk about what happened today in the market and possibly what it means for myself and what it means for you. The headline is Fed interest rate hike is biggest in 3 decades as central bank anticipates its policy rate rising to 3.8% by the end of next year. Monetary policymakers envision inflation cooling by 2024, allowing floor rate cuts. The Federal Reserve on Wednesday demonstrated it wanted to be aggressive in its fight against inflation, approving its largest interest rate hike in almost 3 decades and signaling that its benchmark rate will rise near 4% by the end of next year. At the central bank's meeting that ended Wednesday, officials said they would hike the federal funds target rate by 3/4 of a percentage point to between 1.5 and 1.75. In its so-called dot plot forecast of benchmark interest rates, the Fed indicated it planned to raise the Fed funds rate to a mid-range of 3.4% by the end of this year and to 3.8% by the end of 2023. Fed officials anticipate being able to cut rates slightly in 2024. There was only one dissent. Kansas City Fed President Esther George preferred a 0.5 percentage point hike. Fed Chairman Jerome Powell said the Fed might raise interest rates at its next meeting by another 75 basis points, or 0.75. But he cautioned, "I do not expect rate increases of this size to be common." In its policy statement, the Fed said it is strongly committed to getting inflation down to 2%. The annual inflation rate it has traditionally targeted as 1/2 alongside maximal sustainable employment of its dual mandate. The central bank said overall U.S. economic activity has picked up from the weak first quarter. The Fed said it would adjust its interest rate policy if risk emerges that would impede the Fed from its goals. The Fed's aggressive tone comes after Powell was sworn in last month to a second 4-year term. President Joe Biden met with Powell in the Oval Office earlier this month, and the Biden White House has urged the Fed to combat inflation. Okay, so that was really, really boring. And I read it as so because I want to stress the fact that it was a really boring read. So the question that you're going to ask is, what does this mean for me? What does this mean for yourself? Now, first of all, let's take it from the top. Starting with housing. If you already right now have a house and you have a decent interest rate that's, let's say, 4% or better. Like when I bought my second house, the lowest rate I could get at that time, and this was, October 2018. The lowest interest rate I could get was a 4.75. Now, that was the prime rate at the time. And back then, this was pre-COVID, so the housing values had not skyrocketed like they have today. So basically, I was able to get a place for less than $300,000, even here in New York City. Now, as soon as COVID hit, all of the real estate basically dried up almost immediately. It happened over about a year. But for the most part, all of the available real estate skyrocketed in price while the interest rates were low. That means that every single person who bought into one of these properties got themselves a property at a price they could afford, and they got the lowest interest rate that you could even get on a piece of property, which was either 3% or lower on a 15-year, a 20-year, or even a 30-year fixed mortgage. These people who manage to buy in are never going to sell those properties. Those properties they'll probably be able to pay off, and they'll probably pass it down to their kids. Now, if they're smart, if they're older people, they'll teach their kids how to pay on a mortgage and how to deal with taxes, and their kids will have those houses. But the basic thing is, here in New York City, it's almost impossible to find an affordable house. A starter home at this point is over $600,000. The cheapest homes you can find are still somewhere around $600,000 to $700,000. Real estate skyrocketed. Now, the way it's usually supposed to work is when interest rates go up, the real estate values come down. And it's a simple reason why. If the real estate rates go up, that means fewer people can qualify for these loans and these mortgages. Therefore, the demand goes down. So therefore, the opposite is supply goes up. But what's different this time around is the fact that the values aren't dropping because the demand is so astronomically high. And many of the buyers aren't taking out loans. They're actually bringing in cash money from outside of the country. During COVID, we had stories that you can still look up where there were apartment buildings that were being purchased by foreign money, Eastern Europe, East Asia, and those apartments were being purposefully kept empty simply because these people were trying to launder their money and they didn't even want to deal with tenants because tenants are a pain in the ass. And because we don't have laws that are protectionist to make sure that that doesn't happen, that's what happened. And that's just it. I, as an American citizen, I've lived in China. I've lived in Shanghai. I had an apartment in Shanghai. But I could never purchase the property there because I'm not Chinese. I couldn't do it unless I had some type of joint venture or unless I married a Chinese woman. I've been in the Philippines and stayed there extended periods of time. I could never purchase land in the Philippines. I could only rent properties or I could buy a building, but I can't buy the land that it sits on because they have laws that don't allow me to buy what's there. I'd have to marry a Filipina and she would have to have the property in her name, which is obviously dangerous for any man this day and age because you can't trust women. If you put their name on the property, sure enough, sooner or later, she might leave you and that's it. Your money just evaporates. And a lot of dudes, these retiring dudes who've met women in these other countries and done things like that, like tried to build a nest egg, all of a sudden she locks the doors on him and he can't have any access to the property because it's in her name. So I'd never go that route. Anything I buy, my name's on it. Only my name's on it. Nobody else's name's on it. And it's just that simple. And I understand people, oh, well, that's so selfish. I don't give a fuck what you think. That's how I do business. I'm shrewd. My name is Scrooge McDuck. My name is Lefkowitz. It's like I don't give a shit what you think, but that's how I deal with it. Because I know there's always some people, oh, you're a control freak. I don't give a fuck. So anyway, that's just how it is. But the bottom line is, for you, what does this mean? It means that if you try to buy a property right now, chances are, even if you could find one, you're going to get a high interest rate. Right now, mortgage rates have quickly, after the Fed started raising interest rates within the last few months, mortgage rates have quickly bypassed 5%. Now, a 30-year fixed is, in many cases, about 6% right now. That's disaster if you're looking to try to buy a property around here because the average property is going to cost you well over $500,000. So you're talking about $500,000 for a starter home. That's absolutely not the way it's supposed to be. A starter home, something that's not too lavish, something that's not too perfect, something that may even be run down, should be somewhere around $250,000, give or take. But at this point, it's almost like you're buying the land itself and you're getting the house for free. Most of these houses, Long Island, New York City, most of these houses are in such bad shape. Even the buildings, they're in such bad shape. They're so old and run down and uncared for that what most people do is they buy the property, they tear down the house, and then they rebuild a house. Now, the question is, who's got that kind of money, especially when in this age of inflation that we're under during the Biden administration, lumber, sky-high prices, electric wiring, sky-high prices, shortages of all the wiring and materials you need from China. So the first things first, real estate is going to be disastrous if you're looking to buy right now. Now, if you're looking to sell, this right now is technically a seller's market. If you're looking to sell, it's a seller's market. The thing about it is when you sell, it's not like in the good old days where you had an older couple and they're about to sell their house and a young couple walks up and they're looking because they just got married and they're about to have a baby and they're looking to buy their first house. And you're like, oh, you know what? Yes, this house would be perfect for you. And they buy your house. It's not like that anymore. Right now, what happens is you're an older couple, you're about to sell your house, younger couples come and look at it, and then they start crying because the price that you're asking is market value and it's way too high for them to afford. So even if they do get the guts to put up an offer and they say, okay, well, I'll give you what you want, a corporation swoops in and says, yeah, well, we'll pay you $100,000 more to get that property. So naturally, you're thinking to yourself, oh my goodness, should I sell to this young couple who's looking to have a future for their baby and grow a family and everything? Or should I go with BlackRock, who's going to give me $1 million more or $100,000 more, whatever it is? And you know what? I could take that extra money and I could go anywhere in the world if I had that extra money. And they're offering me so much above market value. I could go to Mars. I could go to Jupiter. I could go to Pluto. So what happens? Hell no, you're not selling it to that young couple. They're not giving you enough money to go to Mars. Shit, I want to go to Mars. So naturally, you sell out to BlackRock. BlackRock buys your property. BlackRock tears your property down, and BlackRock builds up a luxury condo. That's what happens. So that one house that was sitting there, now it can house like 3 or 4 families. And that young couple, now they have to try to talk to BlackRock to get a place, and now they're paying top dollar for a place that they're going to rent, not own. Because now these young couples of Generation Z, if they actually get married, because half of these women are pregnant and shit, they got no wedding ring on. But bottom line is, they're going to be renters forever. They're never going to own anything. Now, I know there are some of these people on YouTube who you hear talking lots of bullshit about, oh yeah, well, you should save up your money in cash so that you can buy the property. But thanks to the inflation, the cash they're saving up is always not enough. And that's just what happens. They're so busy chasing the cost of inflation that they've convinced themselves that they're going to buy a place in cash. The problem is, while they're trying to accumulate cash, everything around them goes up in price. Their food goes up in price. Their gas is fucking $6 a gallon. Everything they want to buy has risen in price. Do you realize that right now, not only, and I learned this today, not only is there a baby formula shortage where you can't even get formula for your little baby, but there's a tampon shortage. Now, I'm a man. I don't know everything about women's stuff, but I thought tampons were just like sponges or something with a string on them. How the fuck is there a tampon shortage? It's like they've got all of this plastic and shit for these stupid fucking masks that aren't protecting me from COVID, and they don't have tampons? I'm like, what's going on? So, not to stray too far off the point, the bottom line is real estate loans, the mortgages, are right now between 5 and 6%. And chances are you probably can't find a property. So how does this interest rate how does it affect you? Well, it's going to make it harder for you to be able to buy a house. But it was already damn near impossible to buy one. So yeah, it's going to make it harder. The next thing down from houses is car loans. You ain't got cash to buy a new car. If you buy a car, it's probably some used piece of shit Nissan Maxima or Altima or Toyota Camry or something, if you could even find one that's, affordable. But chances are you don't want an old piece of shit car. Chances are you want a new car. Chances are you may even want an electric car because you're tired. You know the gas is $6 or $7. Well, guess what? The car loans that we got addicted to, where we were able to lease a car and have a new car every 3 years, yeah, well, that's pretty much coming to an end for most people. The loans on the cars are now going to be higher. So if you want a car loan, well, the Federal Reserve rate hikes are going to make those car loans more expensive. That also applies for credit cards. And I'm going to talk about that in a second, so I'll get right to that. Your credit cards, if you are holding a balance, and I've tried to teach people who listen to me, because not a whole lot of people listen to me. People only want to listen if I'm driving a car and screaming at other cars and stuff. That's the only thing they care about. But the bottom line is, I've tried to give out some good advice about how to build your credit and have an 850 credit score like mine. But the simple fact is, if you're holding a balance and you have a revolving balance, you need to pay it off immediately, because just having that balance is going to cost you a lot more now that this rate hike is going through and these other rate hikes are coming. Interest rates. Now's the time to pay off credit card debt by Gabriela Martinez. Your credit card debt is about to get more expensive. The Federal Reserve on Wednesday hiked a benchmark interest rate that credit cards track by 0.75 of a point, the largest increase since 1994. Within 30 to 45 days, the rate on credit cards will follow suit. The central bank is not done hiking rates, signaling it plans to increase rates by another 1.75 percentage points over its 4 remaining meetings scheduled this year. That means credit card debt is only going to get costlier as the year wears on. At the same time, Americans are ramping up balances, which ballooned almost 20% to $1.103 trillion in April. We're nowhere near the top of how high credit card rates will go. Matt Schulz says the one rate hike is likely not going to be too concerning for most credit card holders. The problem is that there have already been 2 rate hikes, and there are almost certainly several more coming, and all of those likely will add up to a big deal. That's why it is so important for people to take action to knock down credit card debt as soon as possible. Get a 0% interest. Okay, so now it turns into a ad for LendingTree. So bottom line is, and I don't want to read too much into this because you can already see this yourself. It says the average APR is 20.17%. So you're paying 20% interest at least on average. Now, I've tried to teach people that, listen, you get your credit card, you use your credit card, but only buy things with it that you can actually afford to pay off in cash, and you pay off your balance every single night. That takes a lot of discipline, and it also takes a good amount of income. The reason why most people are so deep in credit card debt is because they're not doing what I'm telling them that they should be doing. And I'm pretty sure they've also heard that from other people like Dave Ramsey, Susie Orman. I'm pretty sure they've said the exact same thing. But the reality is these people have decided that they're going to live above their means, that they're not going to do what they're told. And, I guess you'll just suffer the consequences. But that's one of the reasons why I like bragging about the fact that I have an 850 credit score. And I also like bragging about the fact that I've learned how to manipulate the system. You see, I couldn't go on these fabulous vacations. Like the next vacation I go, for people who are just tuning in, the most recent vacation I went on was to JFK on Emirates business class to Dubai and then to Maldives. I got the whole video on my channel, so it's there. Business class round trip. Now, I've seen some of these YouTubers who they only take business class on like one flight. No. I took it round trip, and I used the lounges, and I was drunk as a skunk because you have non-stop champagne, non-stop red wine, non-stop white wine. For me, that made the trip worth it in and of itself, being drunk as fuck, and the pilot keep looking over his shoulder like, yo, what's that guy doing? So, that said, the next trip is to Bora Bora. Business class, Air Tahiti. I'm also going to probably stop in Hawaii because I haven't seen Hawaii yet, and Hawaii is one of the 50 states, so I'd like to see that. I wouldn't be able to just do stuff like that without having excellent credit and without saving up my credit card points so that I could pay off these resorts without having to, spend more cash money. But the only reason why I'm able to get those points and those rewards is because there's so many people subsidizing me who are using their credit cards but not paying off their balances. I refuse to pay interest. That's one of the interesting things that I learned a long time ago when I first started working. I had Chinese friends, and one time I went with my Chinese friends and his father, and we went to Potemkin Motors in Manhattan, and they were trying to basically rip him off on a Lincoln Aviator. And I was listening to the whole thing go down. They brought me with them because I guess they wanted an English negotiator there. Because they both spoke English, but I guess they wanted me there just so that if these people tried to pull a fast one, that I'd catch it, right? And I was a younger person then. I was still in college at the time. But the bottom line, the thing that stuck out to me was now these people are Chinese. They refused to pay interest. In fact, at one point, he actually told the salesman, listen, I'll give you money on the side as long as you cut down the interest rate. Because as far as he was concerned, he shouldn't have to pay the interest rate that they would offer him. And that stuck out to me. And then I started learning about other cultures like Jews and Arabs. They culturally refuse to pay interest. And I was like, you know what? Once you understand how badly you get fucked on interest, and I didn't understand it until I got my first car. I was fresh out of college, started working. I had a shitty credit score. I only was at like 530, 550. It was bad. It was really bad. Anything lower than 700 is bad. Like some people like have 680 and 650. No, that's bad. That's not good. You really need to be at 700 or better, and ideally you need to be at like 780 or better. Ideally, most people are going to fall into like the 700 to the 750 range. Bottom line is, I had bought a car and I only put down like $1,000, which really wasn't even enough to cover the credit. But I put down just enough cash for $1,000 to drive off the lot, and I had a 27% interest rate. Now, most people would be embarrassed to talk about that, but I feel it's part of the learning process. I had a credit card when I was in college. I defaulted on that shit. I owed Discover like $5,000. Those motherfuckers sued me. I ignored the lawsuit. Like they actually literally served me papers on my door in my apartment. And I ignored that shit. And soon enough, the courts put a judgment on me, and they were garnishing my paycheck. And I think New York state law only allowed them to garnish it up to like 10% or something. Now, this was 2005, 2006. This was right before the Great Recession of 2008. Pretty much right before. It was like 2 or 3 years before. But bottom line is, I got my job. I started working. I paid off Discover. I paid off the other loans that I had, student loans that I had. And from that point on, I was like, wait a minute. You know what? I'm going to refinance this car as my credit gets better. I waited till my credit got better. I refinanced from one car to the next. And when I refinanced it to the next car, my interest rate went down. Now, the payments kind of the payments stayed about the same because there was depreciation on the car because it was a used car. But the thing about it is I killed off the negative equity from the first one. And then the next car I bought a brand new car. Brand spanking new. That was my 2000, I think that was the 2007 S-Class, or it was the 2012. Okay, whatever. No, but I know the 2012 Chrysler 300 and the 2007, but the 2007 S-Class, that was a lease. So anyway, bottom line is, I was like, okay, I'm never buying a used car ever again. I will buy new, or I will buy a lease new. Like I'll lease, but it's new, because when you lease, it's only new. So the point is, I developed a discipline just by seeing how badly they were fucking me on these interest rates. I developed a discipline. And I said, you know what, from now on, whatever I buy, this shit's going to be new. I'm not going to pay interest. I'm going to buy it on my credit card. I'm going to pay this shit off immediately. I'm going to suck up these points, and I'm going to go on any vacation around the planet that I want to go on. That's why I say I don't have dream vacations. Like, you know how people be like, oh, yeah, my dream vacation. I was at the dentist today. And I was showing the hygienist and the person who did my cleaning, I guess that's the hygienist, and I was showing the women at the desk my Maldives photos. And they were mesmerized. They were, oh, I want to go to Maldives. I was like, well, guys, have y'all ever been to Dubai? No, we haven't been to Dubai. None of them been to. I was like, yeah, well, you could go, and considering you'll probably go on economy class, it'll be cheaper for you. I mean, you could fly for $1,000. I think the round trip to Maldives is about $2,000 per person, and that's not that bad when you consider how far you go to the other side of the world. They were mesmerized by my photos. I don't have dream vacations. If I pick a place, I'm just gonna go. But I don't just go. I do some research, I save up some money, and I save up my credit card points, and that's it. And the points that I'm getting and the cash back I'm getting is money that I had to spend anyway. So it's not like it's extra money out of my pocket. I use my credit card to pay for gas. I use my credit card to pay for groceries. I use my credit card to pay for car repair. I just got my brakes fixed. I had brand new brake pads put on the front of my truck. It's like, this is money I had to spend anyway. It's just that the way I spent it, I actually got cash back for it. And that's something you don't get when you just spend in cash. So for these dumb motherfuckers who are on YouTube telling, oh yeah, well, all you gotta do is just spend cash. Just spend cash all the time. You can buy a house in cash, you can buy a car in cash. Yeah, okay, you keep on doing that shit while inflation eats your ass. And then on top of that, you can't afford anything that you really want simply because you're always chasing the price of inflation. I make business moves. That's what I do. I make business moves. The Trump finger came out, but you can't see it. And I've been trying to explain this to people, but they just don't get it. So the bottom line is you have to build up your credit. You have to, and at this point, you have to pay down your balances. Otherwise, you won't be able to. You hear these stories about these people with credit card debt or student loan debt. Oh, man, I went to school and I had $50,000 worth of credit card debt or student loan debt. And then all of a sudden it became $90,000. I don't know how I'm ever going to pay this off. Yeah, well, you weren't making any attempts to pay down the interest, and the interest compounded on you. But I can't tell you people nothing. What am I who am I talking to? Y'all busy listening to these cryptocurrency gurus. Y'all busy listening to these people who are just trying to scam you out of money. That's who you're busy listening to. See, I'm not even asking you for no money. I don't ask for no money. I don't try to get you to sign up for courses and shit. I just talk about it and explain it, and that's it. These other people, they're trying to get you to sign up for courses on how to trade cryptocurrency. No. You mean how to lose money on cryptocurrency. And they're up there trying to teach you. You don't got to sign up for no fucking course to teach you how to improve your credit card. How stupid is that? There's enough free information on the internet. You don't have to sign up for no fucking course for somebody to debt shame you. You don't have to sign up for no course to learn how to do better at credit cards. What are you kidding? I mean, at a certain point, it's like I have to just take a step back and just look. And I'm like, what the fuck is going on? It's like, you mean to tell me these people don't have enough common sense to realize that even in the palm of their hand on their cell phone, they have access to so much free information. Why would you need to pay somebody to tell you that you can't afford something? Why would you need to pay somebody to tell you how to fix your credit? All you got to do is pay down the fucking bills and stop making new ones. That's it. In fact, it's actually cheaper for you to do exactly what I'm saying. It's just amazing. I swear to God, it's amazing. It's really amazing. It's amazing. It's amazing. Would you believe this dumb motherfuckers who literally spent and who are still spending money in order for somebody to teach them how to buy cryptocurrency, which, by the way, has plummeted this week. They've lost so much money. It's incredible. But these people were pouring money into a system to teach them how to lose their money. I mean, I don't even know what to say to that. I don't even know what to say. So the bottom line is this. This Federal Reserve rate hike has basically made the money that you used to be able to get on loan and credit that was cheap, it's made it more expensive. 0% interest is gone. 3% interest on mortgages for 30 years is gone. Chances are you're never going to see that again. In my lifetime, there's a very good chance we're never going to see that again. In fact, if there is another pandemic, if there is another 9/11 scenario, because that was when Alan Greenspan lowered the rates, because when we have a major catastrophe, the government believes that what we're going to do is psychologically, we're going to do the right thing and we're going to start saving money because we're afraid. They don't want us saving money. This entire system is built around debt and credit spending and deferred payments. They don't want you saving money. After 9/11, they dropped interest rates knowing that you were going to go out, take out as much money as possible, buy a boat, buy a car, buy a house you can't afford. And sure enough, by 2008, which was 7 years later, by 2008, we had that great financial crisis. 2008, then you got President Obama. President Obama comes in. They start their, their bailouts that lasted, they bailed out a bunch of people. They gave bridge loans. Sure enough, now you're at 2022 and you're facing, things are even worse. I think I want to end there. As far as I'm concerned, we've been in recession since 2001. Now, I know most people would jump up and say, oh, that's not true. The government numbers don't say. Listen, the government measures it how they want to measure it, any way it makes them look good, any way it allows them to keep their job. As far as I'm concerned, this country's been in recession since 2001. Now, I can stretch that further and say, okay, well, maybe we've been in recession since 2008, but I really want to go back to Greenspan and say 2001. I really want to do that because I've been watching this country shrinking in many ways since 2001. Since 2001, it really, visually, I've been watching this country shrinking. The job market has been shrinking. Your jobs are no longer the same quality that they were before. They no longer pay the same way they paid before. They no longer offer the same health care. They no longer offer the same time off. It really feels to me that this country's been shrinking since 2001. So when they talk about recession, whether you're in it or not, I believe that we've been in recession since 2001. I could, again, say that we've been in recession since after 2008. But more likely, I'm more willing to say, no, I actually believe since 2008, we've been in what's called stagflation. And one of the things about stagflation you have to understand, one of the signs of stagflation is high unemployment. But what somebody will do is they'll point to the fact, oh, well, Obama and Trump had low unemployment. They had low unemployment under 5%. Here's the problem, though. If most of that new employment is based on government jobs that require taxes, I don't really consider those real jobs. I consider that corporate welfare. I consider that government welfare. If those jobs are due to the government having quantitative easing and they're making cheap money, which is ultimately driving up inflation, as far as I'm concerned, those aren't real jobs. Real jobs, believe it, and here's I hate to deviate. When I was a kid, interest rates were 10%. I had a bank account, Republic National, and I was earning 10% on a savings account at Republic National Bank. When the interest rates are high, that allows for real growth. Why? Because the money that's borrowed is borrowed with more responsibility. It's just like I'm telling you about your credit card. If you're borrowing off your credit card and you're paying the money right back, you don't have a problem. The problem comes when you don't have the urgency. And that's what I really feel that's missing from this country. There's like a sense of urgency that I just don't see. I don't feel it. It feels like people aren't moving methodically. It feels like people don't give a fuck. It feels like what more do I have to point at than the Great Recession and the Great Resignation? What more do I have to point at? Who the fuck told you that you get to just quit your job and still manage to eat and not be on the fucking street? Ever since I was a kid, I knew a man don't work, a man don't eat. And it was just that simple. Nothing else. A man don't work, a man don't eat. That's what I learned. I was like, okay, well, understanding that, it's important for me to always have a job. Not only do I always have to have a job, but I always have to have a job that pays me enough, that takes care of me if I get sick. I got dental. I got eye if I need glasses. But these people now are under the impression that somebody's going to fucking pay them not to work. And then I think about this government. I'm like, you motherfuckers handed these people welfare checks while they weren't producing anything. So it's not like they just got this idea out of thin air. You gave it to them. One of the important things to remember about stagflation is one of the major parts of stagflation is failed government policies. It's not just enough that you have high unemployment or high underemployment, or you have a period where the GDP's not growing. First of all, if we're going 30 trillion plus into debt for national debt, then that means whatever growth you had is fake because your net is a negative. So as far as I'm concerned, now you can argue with me, you can say I'm wrong, but this is what I actually believe. I really believe we've been in recession since 2001. I believe what you're seeing now is really stagflation. And again, one of the most important things about stagflation is it's caused by poor government policy. I can't think of a poorer policy than telling people that you're going to just stay home and we're going to pay you. I can't think of a poorer government policy than telling people you don't need to pay your landlord. I can't think of a poorer government policy than telling people you don't need to pay your bank. And then, not only don't you need to pay your landlord or your bank, but we're going to make it so that they can't evict you. As far as I know, this is so unconstitutional. The government, in this case, violating, just walking all over 14th Amendment private contracts, just walking all over it and telling people, just stay home, we're going to give you welfare checks. Just stay home, you don't have to pay your landlord, you don't have to pay your bank, you don't have to pay your mortgage. And it's not as if the bank forgets that you owe them money. Now, 8 months later, they're looking for their money. So the moratorium ends, and now they're demanding your pay up or we're throwing you the fuck out your house. Or how about student loans? I can't think of a poorer government policy than tell you don't need to pay your student loans. We're going to just put the hold on it. Did you really think that these people were going to start saving up money and that they were going to pay those student loans at the end of the student loan moratorium? No. They took that money. They went out and bought new cars. They went out and bought iPhones. They went out and bought Android phones. They went out and bought bigger televisions. They went out and bought iPads. They went out and bought Balenciagas, shoes and bags and shit. And I'm thinking to myself, I'm like, wait a minute. This ain't how it's supposed to be. But part of stagflation is poor government policies that, while they were supposedly meant for good, causes a deeper recession than you normally would have had. So that's basically all I got to say. These interest rate raises are important. They should have been done a long time ago. But ultimately, what you're gonna feel on Main Street is you're gonna feel people angry that suddenly they can't afford what they want. And that's part of the reason why so many people try to repair their credit. They're not trying to fix their credit for themselves. They're trying to fix their credit because they went to try to buy something and they were told no. They applied for a credit card and got denied. They applied for a home loan and got denied. They applied for that car loan, that brand spanking new Tesla Model 3. They applied for a loan and got denied. They applied for that Mercedes EQS and got denied. They applied for that BMW iX and got denied. They applied for that Cadillac Lyric and got denied. They applied for that Dodge Charger Hellcat and got denied. They applied for that Dodge Challenger Red Eye Lockpick Edition and got denied. They applied for that Jeep Grand Cherokee, what is it called? The L model, and they got denied. They applied, they wanted to buy a Cadillac XT6 and got denied. They wanted to buy a new Cadillac Escalade and got denied. They saw the Porsche Turbo, what is that thing called? What is that thing called? It's not the Panamera. It's not the Cayenne. It's called the Taycan. Yeah, they saw the Porsche Taycan. They wanted to buy a Porsche Taycan. Got denied. They saw that Lamborghini Urus. Oh, how much is that Lamborghini Urus? $350,000. Sign right here so we can do a credit check. And got denied. That's why your credit's fucked up, and that's why you're trying to fix it, because you got tired of being told no. Well, guess what? Federal interest rate rising means that from now on, when Champion says no, everybody else says no too. Because, the commercial goes, when everybody else says no, Champion says yes. No. When everybody else says no, you get denied.
When your bank says no, Champion says yes.